Hey traders, this is Todd Gordon, founder of TradingAnalysis.com. This is the free video going to be for March 27th, Friday. And the topic of the free video tonight is going to be a question actually answered for a member in the members video. So I'm just going to play it forward and hopefully pick up something on the direction of the Nasdaq and hopefully pick up a thing or two from his question. So here you go. I'm going to answer him right now, and it pertains to the positions that we put on today. We have about 3 new positions and stopped out of 2, put 3 on. So it's a good, a good question. He writes me, he says, I'm using TOS and trading the NQ futures June contract, which we're now on. We're on the M5 contract. Symbol on TOS and QM5. Yeah, I was using a 1-hour chart from the low 4281, which is right there, on Monday 313, and going to a high of 4472 on Friday. So 4472 is going to be right there. And he's just looking for help on a retracement. And it's actually okay. It's not okay that I didn't answer the question right away, but it is okay that I'm answering it today, because I don't think this is a move where you're going to use a retracement. All right. So, and let me, before I dive in, let me just finish what he says here. Right now I'm looking at day, and I asked him, let's say, okay, what specifically are you looking to do? And he wrote back, goes, I'm looking to day trade these futures, which, guys, I am not a big fan of that. I really think you guys should be swing trading options. It's a much safer way. Day trading futures will chop you up. Unless you have a seat in exchange, on the exchange, if the commissions you're going to pay for the amount of ticks you're looking to pick up, commissions are going to chop you up. So I first of all would really recommend against that. I mean, you, I think, are much better off swing trading options. Be in a position for a couple days. Trust me, it's a better way to trade. I promise you. I mean, I saw a study from a friend of mine who says, if you do X amount of trades per day and per week, you got to make like an 80% return in your account to beat the commissions. It was crazy. So it's not a good thing, guys. I'm telling you, it's better to swing trade the market, be in and out, and do it with options. So, okay, anyways, looking at day trade futures, I really don't have a bias other than to give myself an idea of possible retracements, projections. I'm looking primarily at opening range breakouts on a 5-minute and 30-minute range model. Today caught me off guard, and then I wasn't expecting the June contract to fall off a cliff. Okay. Enjoy your classes. Have a little troubles. He's taking the fib class that I just did. So part of it, one of the reasons why I wouldn't want to do a retracement here is because it depends on where you are in the correction. Okay. Let me just push his questions off to the side here. And I wouldn't tell you to do a correction from low to high. And Sam, that's what you're asking, is to do a correction. You would do from the swing point low to the swing point high. You'd pull this over and you look for retracement levels. But that would be if you are in a motive, or what we call a trend wave, which means labeled with either a 1, a 3, or a 5. Okay? 1 is a trend wave, 2 is a corrective, 3 is a trend wave, and 5 is a trend wave. I don't think this move was a, I don't think this was a trend wave. I think this was part of a correction. And the only thing you're going to use a retracement for is an entirety, all of the correction. Sam, if you remember the course that we talked about, we looked to buy 3-wave pullbacks, okay, into a Fibonacci retracement level from a major swing low to a major swing high. So the major swing that you're looking for is here up to here, and then the 3-wave swing, remember, you want to go swing wave low, a swing wave high to a lower high, followed by a swing wave low to a new low. So that is why we're doing A, B, and C. Remember, those of you in my fib class, you want to go to a new low for your 3-wave swing. So you would not have done a retracement from this B wave because you were expecting a push to new lows, right? You weren't expecting a retracement to go less than 100%. Like, here, let me just draw a new one. Actually, no, let me just use this one. You were not expecting this wave to retrace less than 100% of this wave, because if it's a good 3-wave move, you wanted it to go through 100% and down a little bit lower. Okay, so that's why I would not have done a retracement there. With a good 3-wave swing, we needed 1, 2, 3. Now we put the retracement at the most recent major swing low, major swing high, A, B, C, and we just went right to the 50% retracement. Okay, so the wave count I'm thinking in the Nasdaq, which actually ties in perfectly to that QQQ trade we did, and also the new long position in Twitter, is this. Is that. Okay, so preferences, I'm going to ignore that because we did not get a daily bar close, not even close. Okay, so here's the wave count that I think is happening. I think we just did an A, a B, a C down into the 50% pressure tracement of wave 3, right? So even this, look, nice 1, 2, 3 down in wave 2. So it was a very similar looking correction. I'd actually go like this. Yep. 1, 2, 3, 4, 5, A, B, C. So 3 waves down in 2, 3 waves down in 4, and then we're moving up. So, you know, then the other thing you could do is you could do a symmetrical comparison of wave 2 and 4. You want to compare correction to correction. That was another thing we covered in the fib class. So the way you do that is Motive Wave has it built in, and I showed you guys how to do it with extensions on Thinkorswim, on TradeStation, and Motive Wave. I'll do it by hand here on Motive Wave. You go to the ratio right here. Okay, you're looking for the ratio of wave 2 compared to the ratio of wave 4. So you go low to high, and now you have a fixed distance. Look, the distance from 43.29 to 100% at 41.26 is fixed. It doesn't matter how long I make this line. The distance between 0 and 100% will stay fixed. See that? 0 and 100% stay fixed because it's a fixed in, it's a distance that's set in time, right? It can't change. So, you know, what you'll see here, guys, is look, we went right to the 100%. Right, so let me get rid of everything else. Let me make it a different color so it sticks out from the other one we've done. So what happened here, guys, is today, you know, as bearish as everyone is, everyone's talking about depression and not, well, how about recession and pullback and stock market top. Set the emotion aside, and we just did wave 1, 2, a beautiful wave 3. Just let Motive Wave do the work for you. 5-wave move. In wave 3, as you expect, ABC. We pulled back to the 50% retracement in wave 4 compared to wave 3. We did a symmetrical pullback of wave 2 compared to wave 4. And that was the low today. Okay, you know, do I know we're not going to crash through to new lows? No. But we're going to risk a very small amount with a couple NASDAQ positions that we put on to potentially catch wave 5 to new highs. All right, and the Qs are the same trade. It's the exact same trade. Qs track the NDX, the Nasdaq 100, which is that futures contract you're trading. So, Sam, I hope I helped you there. Part of the reason I didn't answer that question is I knew I didn't want to tell you you're not going to do a retracement on this move because it's not a trend wave. B wave is part of a corrective wave. You're going to do a retracement of a trend wave compared to a corrective wave. And if you remember that fib class that we did, that was the definition of a retracement. You're measuring a corrective wave by way of comparison against a prior trend wave. All right, so I hope that helped. All right, so we've taken up a lot of time in that, but I mean, I think it's really important. It's the whole basis of what we're doing. I mean, on the Qs, the NASDAQ tracking stock, it's the same thing. It's the same thing. Here's E signal. You know, distance traveled right here will be equal to the distance traveled here. What was also awesome is if you just compare this swing to this swing, that one is 100%. Guys, there was so much fib support here. Okay, so this swing is here. Let me do it this way. This swing is equal to this swing from the 100, the 104.35 right there. This swing is equal to this swing, not labeled here on the cues. And then, as I already said, we did a 50% price retracement of this swing down to here. So there's a lot of fib support there. Basically, you know, if as bearish as everyone was, I saw some divergences in the indicators. If I didn't take longs and we moved higher, I would never forgive myself. So so that's that. So that's the Nasdaq. That's why we sold an overnight put credit spread, pumped up volatility. Okay, so I hope that 10-minute video helped you there. If it did, go ahead and give us a like just below on the YouTube page if you wouldn't mind. It's a major help to us to help us rise up in the very competitive YouTube ranking. So go ahead and give a like if that helped. And if you'd like to take a trial, we do offer a 30-day trial for just $7. You just go ahead and click right here on Join Today. Okay, right here on the homepage, click Join Today. And then you'll go in and you're going to have an option. Are you a Forex trader or are you a stocks, options, and ETFs trader? If you're stocks and options, you just click Learn More. And you can go ahead and find out exactly what's involved in our services. Take a 30-day trial for $7. Sign up now, and you're good to go. All right, guys. Hope that helped. Thanks for listening, and talk to you guys soon.